What's up, guys? It's Faith the Strat. A lot of you guys probably see my Instagram story or seen on Discord or wherever that I was able to damn near call the top the day it happened and close to the time on Oilyboyz in my Discord. Pre-market, I estimated a 50 to 100 point drop. And when we come to measure this move, we see if we go back based off the 6:30 open my time to the close. Here we have 84 point drop. So right within my prediction. 50 to 100 points estimated drop. Dead on. Now, a lot of people are curious as to how I was able to call this, which I'm going to show you. It was very simple. There was a few things. One thing I understood, all this price action is just a giant box, and I have my open of the month here and my current high. I also understood that we go by price action in time and date wise. This was last week's high and this was last week's low. So price literally existed in this box that was about 70 points. So I understood any move down was going to cause first off, a full fade of the box, 70 points, plus an expansion of the box. So realistically, there's a 140 point move when major consolidation pushes happen. Now, once we got here, it was very obvious because if you understand ICT concepts or the strat, from here to here, there's a very clear and apparent Brodmann formation that was formed. I don't really have that many Brodmann formations on my screen anymore. If I'm trading ES personally, don't really feel the need to use them because I trade week by week. But if you just look on a weekly level, on Friday, we ran up the highs here. We had a tentative Thursday. Monday, as soon as we open, we trigger it. So you have to understand when you break certain levels, you have different level time frames, participants in it. So we had weekly buyers triggered here, and then we faded the move, dropped them in. Here was consolidation, but I understood we had data Monday, Tuesday, JPY data, and then today. So I understood this data range was going to be used to push the market. In addition to that, I saw us making these highs, but we were creating a giant vacuum for price. So here was a giant block of vacuum, and to my far left was only stops with no imbalances. So it was very simple. Now, when I actually go and I use ICT concepts and I look on a smaller time frame, I can see specifically when we go to the timing window, because like I said, everything is specific and measured in time. You can see in Asia, when we had that GPNY news, we used that actual news candle. So when we came today in the 5 o'clock open for futures trading, I noticed we were above London's high, and London literally looked like an inside day. When you look back, London is inside of Asia's range, which is very, very, very rare, while Asia has this, very huge, insane box. And then once again here, London would be right over here. New York made this high. We dipped past this news candle. Once I saw us dip past this news candle a few times, or 1 or 2 times, and then we come into the actual open, 6:30 PST, the drive breaking past news, but then also breaking past today's news. This was today's news. This was, I think, PPI numbers. This made it very obvious, very obvious. So, of course, everything is better in hindsight, but I had this planned. The only thing that threw me off was at the time, the volatility kicked up so much. So I was already shorting, but I did get stopped out 2 times. But once I saw the major reject, which happened, I think like on a 5-minute, once I saw this and I saw all these wicks, I realized like, hey, these are just rejection wicks forming, and this is going to eventually be, short. So realistically looking back, I could have shorted the moment we felt that range, and I could have put my stop, either the insanely tight stop, which would have been this high, or the previous day high, either or. Now, when I actually look, I actually have it saved. You can see the short position planned out after. The high from the news candle in the previous day would have granted a 26-to-1 R trade. And that's with me aiming for the next news channel. Next news candle. Now, this news candle, which I had in sight, was actually last week's, I think it was CPI data, but this is last week's news. So anytime I have major news on the calendar, I'm always marking it because they're building liquidity. When you look back, you can see this same shit happens over and over again. They play the same game. Run liquidity and then then they start their moves. So I saw the origin of, not the origin, I saw the news candle here, and then I saw right here, it looked like the origin or started the move. So I assumed if people bought in long here, or they triggered here, longs, dropped to here to reaccumulate majorly, where would they want to sell? Well, if they've put people way up here and triggered all these breakout buyers, a shit ton of them, who think we're breaking that major quote unquote downtrend line on the SPX. If you zoom out, there's a major downtrend line we're respecting. That gives them enough liquidity to push the market where they want to. And that dropped us down to the news candle and down past my major levels. So, I had it in stacks. I had the midnight open as my first target, and then I had this institutional. But before that, actually, I did have the high of London. So at one point, I had London's high because that just gave me more confluence. Like, hey, if we break past London's high, we're going to fall through it. I'm very positive we're going to hit institutional. This is an institutional level. Once we passed the institutional level, next was my low. Third was this major internal low. Fourth was quote unquote external in the news candle. Very simple. Now, when I looked, another thing that helped me trigger it was at the time, I saw major divergence on the major indexes. So I saw ES and NQ start pushing up while Dow was puking. And I noticed Dow was below midnight's open very early on. So you look here at 6:30 our time, Dow is opening near the midnight open, boom, and already falling below. So I know these indexes are made or designed to trade very similar because they have like assets, especially ES and NQ, S&P 500, NASDAQ 100 tech companies. This is the Dow 30, top 30 industrial, quote unquote, or American, manufactured companies in the country. Dow is always going to show the move quicker than the 500 or the 100 because there's only 30 stocks. So any move normally is going to move a lot quicker based off the Dow because you have, less stocks on average to manipulate. You only have 30 versus you have 100 and you have 500 here. These two are going to be very similar because the top 500 companies happen to be tech companies. So these two are always going to be very similar, but I'm always expecting the Dow to either lead or lag a lot more. So me seeing this and knowing some of the companies like American Express, Steel and et cetera, that are in the Dow made me very confident that the ES and NQ would follow. Once I saw the first major 5-minute candle on ES, I knew right away that was it. Because by the time this first 5 triggered 7:30 my time, keep in mind I'm PST, look where we were. Look where we were. We were already puking way below midnight. So I knew we would at least catch up. If we now think about it, if I have all these levels set, I have midnight open, which is below London. Then I have my institutional, and I understand all this is liquidity. What do I know is happening here? Stop. Per the strat, all this is a giant pivot machine gun. There's no leftover liquidity. If you see all the liquidity had been filled in, there's no imbalances. So there's nowhere they need to recover liquidity. They only need to purge it. So this is a very simple, sizable setup. This has been one of my best trades this year because I was able to size in how I wanted and add a very large portion of my account in increments, but also while protecting myself. And that's another thing I want to talk about is execution, because a lot of people saw this move coming, or maybe not a lot. Some people did, but you didn't execute correctly. And that's all that matters. Predicting is cool and all, but what's going to really take you to the next spot is focusing on your execution in these trades. So this one was planned, executed like 95%. I say the only part I messed up, I got stopped out. I put my stop a little too tight on my SPXs and I stopped myself out. But SPYs, it was perfect. Before lunch, I had already made the amount of money I wanted, and price had just started to slow down, so it's perfect. I cut most of my positions and let the rest run. Didn't have to even trade the PMs. Big fan of getting your money, locking in and getting off the screen. So locked in, significant move, went to sleep. Simple, rinse and repeat. So now, we're coming into today's opening. It's the 19th. We have Asia, London, and then we have NY is going to be open. Oh, I'm sorry. NY actually just opened. We have a continued puke. Realistically, I see us puking and taking out some of these lows, 38.91. And that would kind of line up with the 70-point box that we were in already. So when you look here, measure that out. About 70 points. That's going to take us to about 3,800. So we'll most likely by today end below the month's open. So now this month should look like a damn near shooter. Boom. Easy shooter. Now remember, if you guys paid attention, I had posted by February this was going to happen. I said SPY. I think I said like 340s SPY or some shit like that. February. Look where we're at. Two up continuation, two up failed, two up, inside down. So it's gonna be a two up, two down below this level. Look at these pivots we have that we can take out. Boom. And boom. Also, when you look at this, if you pay attention, this is next to major yearly levels on the SPY. So we have the open, last year's low, and 12-month. So yeah, we could easily take all of this and be, like I said, 340 SPY. That's just my bias. We could do something very, very obvious like this. Every time these levels trigger, we're knocking out longs, triggering shorts. So, and of course, there's broad information. So pay attention to what pays you, traders. Have a good day.